Dear students, welcome back. I am here with the last illustration under Accounting for Royalties unit. So today I'm going to solve the last problem on accounting for royalties. So illustration number 15. Janata Publishers agreed to take a lease to printing and sales of books from Mr. Vinai on 1/1/2015. The following are the terms of lease. That is, point number 1, royalty payable at 20% on the sales price of the books. The books is priced by rupees 50 per copy. Point number 2, the author is to be paid the minimum rent of rupees 22,000 per annum. Point 3, each year short working can be recoverable out of the next 2 years. The details are as under. So here, number of copies printed, number of copies in closing stock, the information whatever they have given. So in the year 2016, 1,800 copies has been printed and unsold, that is closing stock is nothing but unsold. So closing stock is 200 books. In the year 2017, 2,100 copies has been printed and 300 copies were the closing stock. 2018, 2,600 books were printed and 250 books were in the closing stock. And in the year 2019, 2,800 books were printed and 150 books were in closing stock. So now prepare the necessary ledger accounts in the books of publishers. See here, he has not given the sales, so we are supposed to calculate sales. And whatever the royalty, they said payable 20% on the sales price. They said it is 20% on the sales price. They have clearly mentioned in the point 1 only. Clear? So for this purpose we are supposed to calculate sales, total sales value, then number of copies printed and closing stock, everything we should consider. Okay, so there we are supposed to prepare a table to calculate this. So calculation of sales value, under that open a table with the 7 columns, that is year, number of copies printed, then opening stock, then closing stock, number of books sold, selling price and sales value. So this is the table. So let us see, in the year 2016, number of copies printed is 1,800. Opening stock will be same 1,800. So closing stock is 200 books. So 1,800 minus 200 is number of books sold is 1,600 books. So try to understand, opening stock minus closing stock is the sales. So 1,800 minus 200. So number of books sold is 1,600 books. So selling price is 50 rupees. So 1,600 into 50. So 80,000 rupees is the sales value. So next, in the year 2017, 2,100 copies were printed. So opening stock, that is previous year closing stock, will be always opening stock for this year. So that is closing stock of the 2016 is 200 books plus present year printed 2,100. So total 2,300 books there in the stock. So closing stock is 300. So number of books sold is 2,000 books. So 2,000 into 50 rupees. So that comes to 1 lakh rupees. So how do we got 2,000 copies sold? So that is 2,300 opening stock column minus closing stock column 300. So number of books sold is 2,000 books. So next, in the year 2018, 2,600 books were printed and previous year closing stock will be the opening stock of this year. So that is 300 plus 2,600. That comes to 2,900. So 2,900 Out of that, closing stock was 250 books. So sales is 2650. So selling price is 50 rupees. Sales value is 1,32,500 rupees. Sales value is 1,32,500 rupees. So next in the year 2019, 2,800 books were printed. So previous year opening stock 250 books plus present year printed 2,800. So put together it is 3,050 books minus closing stock, that is unsold, is 150 books. So sold is 2,900. 2,900 into 50 rupees, so that comes to 1,45,000 is the sales value. So now we could able to identify sales value of all the years. So now further we are supposed to prepare an analytical table so that we can get to know that which all the year went under short working and which are the year we could able to recover those short workings and all. Clear? So let us open an analytical table with how many columns? 9 columns. So because this is we are going to calculate royalty payable 20% on sales directly. So here sales royalty payable at 20%, minimum rent short working surplus, short working recovered, short working not recovered, and amount payable. So this is the table you are supposed to open. Clear? So after opening the table, so let us enter all the information as per the extraction whatever we have done. Okay, so whatever the extraction we have done, so let us do that. So now let us enter 2016 year. Sales value is 80,000. So 20% on 80,000, that is 80,000 into 20 divided by 100 is 16,000 rupees is the royalty payable amount. But minimum rent was 22,000. So obviously we are at a short working. So how much short working? 6,000 rupees. So short working is 6,000, that is 22,000 minus 16,000. So surplus nil, short working nil, short working recovered nil, short working not recovered nil. So amount payable 22,000. So in the year 2017, sales value is 1 lakh rupees. 20% on 1 lakh is 20,000. Minimum rent is 22,000. So therefore short working is 2,000 rupees. So surplus nil, short working recovered nil, short working not recovered nil, and amount payable is 22,000. So next in the year 2018, so that is 1,32,500, that is the sales, and a royalty payable is 20% on sales. So 1,32,500 into 20 divided by 100, 26,500, and minimum rent was 22,000 rupees. So short working recovered nil, so that is short working nil, and we are at surplus of 4,500 rupees, and short working recovered 4,500, and short working not recovered 1,500. That is out of first year 2016 year 6,000 rupees short working we could able to recover. In the second year 4,500 rupees. That is after short working, after completion of 2 years, so we could able to recover 4,500 rupees. So not recovered 1,500, and amount payable is 22,000 rupees. So now in the year 2019, sales is 1,45,000 rupees, and royalty payable at 20%, so that comes to 29,000, but minimum rent is 22,000. So short working nil, we are at surplus of 7,000, that is royalty column is greater than minimum column. So surplus is 7,000 rupees, and short working recovered, that is second year short working 2017 year short working 2,000 we could able to recover. So amount payable is 29,000 minus 2,000 short working recovered, 27,000 is the amount payable. So now let us open ledger account, that is minimum rent. So now let us open ledger account, that is minimum rent account. Open the table with 6 column, date particulars rupees, date particulars rupees. In the year 2016, to Vinai account 22,000, 2015 by royalty account 16,000, by short working account 6,000, both the side total 22,000. In the year 2017 to Vinai account 22,000, 2017 by royalty account 20,000, by short working account 2,000, so both the side total 22,000 and 22,000. In the year 2018 to Vinay account 22,000, 2018 by royalty account 22,000, both the side total 22,000 and 22,000. In the year 2019 to Vinay account 27,000 and 2019 by royalty account 27,000. So we are done with the minimum rent account. So further we are moving on to the royalty account. So that is in the year 2016 to minimum rent account 16,000. So this has been extracted from the royalty payable column, that is in the analytical table. So to minimum rent account 16,000, by P&L account 16,000, both the side total 16,000 and 16,000. 2017 to minimum rent account 20,000, by P&L account 20,000, both the side total 20,000 and 20,000. 2018 to minimum rent account 22,000, 2018 by P&L account 22,000, both the side total 22,000 and 22,000. 2019 to minimum rent account 27,000, 2019 by P&L account 27,000, both the side total 27,000 and 27,000. So we are done with the royalty account, and further we are moving towards preparation of short working account. So open short working account with the 6 column table, that is date particulars rupees, date particulars rupees. So 2016 to minimum rent account 6,000 rupees, by balance carried down 6,000 rupees. This is the first year short working. So next 2017 to balance brought down 6,000 to minimum rent account second year short working 2,000 rupees, by balance carried down 8,000, both the side total 8,000 and 8,000. In the year 2018 to balance brought down 8,000 rupees, 2018 by royalty account 4,500, by P&L account 1,500, and by balance carried down 2,000 rupees. So both the side total 8,000 and 8,000 rupees. In the year 2019 to balance brought down 2,000 rupees, 2019 by royalty account 2,000 rupees. So here you have to be very clear. So where all we could able to recover, so that we have transferred to royalty account. For example, in the year 2018 credit side, look at by royalty account 4,500 rupees. So that has been recovered out of 6,000 of first year. By P&L account 1,500, which could not able to recover, which we could not able to recover. So balance carried down will be the second year, that is 2017 short working, that is 2,000 rupees. So that 2017 balance that has been shortage, that has been recovered in the year 2019 under by royalty account 2,000 rupees. So we are done with the short working account. So let us move further to Vinai account. So open Vinai account with 6 column table, date particulars rupees, date particulars rupees. So in the year 2016 to bank account 22,000 rupees, 2016 by minimum rent account 22,000 rupees, both the side total 22,000, 22,000. In the year 2017 to bank account 22,000, 2017 by minimum rent account 22,000, because this first 2 years we could not able to generate revenue out of royalty, so we could able to pay through minimum rent. So next in the year 2018 to bank account 22,000, by royalty account, because we started generating more than the minimum rent. So that is why royalty account 22,000, both the side total 22,000 and 22,000. In the year 2019, two bank account 27,000 and 2019 by royalty account 27,000, both the side total 27,000 and 27,000. So we are done with the problem. So I'm going to end up this. I will be back with next unit in my coming video. So until then, take care, see you soon, and bye bye, stay safe.